Morning, students. Welcome you all on the last and the fifth lecture on Ind AS 116 leases. Students, in the next 5 minutes, today being the last class, in the next 5 to 6 minutes, I will summarize the last four class discussion and then I'll take it forward, right? Students, in Ind AS 116, we started with the lease definition where we have covered that lease is a contract between the two parties, which is lessor and lessee, right? Where the right to control the use of an identified asset has been transferred to the lessee for an amount of consideration, which is lease payment, over a period of time, right? This is what it is given in the lease contract. This is what it is given in the lease definition. Then we have understood the meaning of identified asset. And we have discussed identified asset are those assets which are explicitly or implicitly, defined in the contract. And an asset is known as an identified asset where the lessor, right, where the lessor does not have substantive substitution right, means lessor does not have a right to replace the asset, right? And the lessor does not have a right to replace the asset means the lessor does not have a right to replace the asset in the normal circumstances for the benefit of the lessor, right? For example, if the asset got damaged, right, the asset becomes faulty. In that case, lessor is replacing the asset, but in this point of time, it is for the benefit of the lessee, not the benefit of the lessor. So we discussed identified asset at length, right? Please refer the video number 1 for identified asset definition in length, right? Then we have covered right to control the use of an asset. If I am transferring my car in favor of you, when I'm saying transfer, I mean to say if I'm giving my car to you for using, it is transfer of right to use. But if I am giving all the instruction that how you will use that asset, for what purpose you will use that asset, in what manner you will use the asset, in that case, although right to use has been transferred, but right to control the use is still lying with me, right? So there is a difference between right to control the use and right to use. Okay, friends, if I talk about this right to control the use of an asset, it says that the right to control of the use of an asset will be established only when two conditions will be satisfied. Number one, the right to obtain substantially, significantly, all the economic benefit relating to the use of the asset must have been transferred, plus right to direct the use of the identified asset also have been transferred. Means if the lessee is controlling the right to use of that asset and the lessee is getting the economic benefit out of the use of the asset. I'm not saying ownership, I'm saying use, right? If these two conditions will be satisfied, then we can say that the right to control the use of an asset has been transferred to the lessee, and hence this is an identified asset where the right to control the use of an asset has been transferred, and this asset comes under the lease contract under Ind AS 116. Then friends, after this we discuss the concept of inception date of the lease and commencement date of the lease. Inception date of the lease is the date where the principal terms and conditions have been defined, right? And this is the date where the parties will define whether it is a lease contract or it is not a lease contract under Ind AS 116, right? And the lessor will classify this lease whether it is a finance lease or it is an operating lease. From the lessee perspective, there is no segregation of finance lease and operating lease, but from the lessor perspective, there is a segregation of finance lease and operating lease, right? Now you guys have understood that why. Commencement date of the lease, this is the date when actually the right to control the use of an asset has been transferred, the possession has been given, the asset has been handed over, the lessee has started using the asset, right? So this is the date where the lessee, where the parties will determine the lease term and recognize the lease contract in the books of accounts. For example, in case of a lessee, the lessee will recognize right of use asset and lessee will recognize leasehold liability, right? Then friends, the most important part, and in the examination, this part is very, very, very important, lease term, right? So what is a lease term? Because your lease term will define the entire accounting, right? Your lease term will define, because now you guys have understood, if I conclude that my lease term is 5 years, the discounting is required to be made on 5 years. If I'll conclude that lease term is 4 years, my right of use asset, my lease liability is required to be recognized at the at a period of 4 years, right? So this lease term becomes very, 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 very important in this particular standard, and the lease term consists of four things. Shruti, what comprises of lease term? Can you please tell me quickly? I mean to say, can you please write this quickly? The lease term, the lease term includes non-cancelable period, right? In the contract, there is a lock-in. It consists of non-cancelable period. It consists of rent-free period. Plus, it also consists of optional renewable period. It also consists of optional renewable period where lessee is reasonably certain that yes, lessee is going to avail that renewal period. Plus, it also includes optional termination period if the lessee is reasonably certain that lessee is not going to avail the termination period, right? So these are the four period: NCP, RFP, ORP, and OTP. These are the four period which has to be considered while computing the lease term, right? Then we have discussed in case of a lease where termination clause is there. If lessor and lessee, both the parties have a right to terminate, that period will not be considered for the computation of lease term. If only lessor has the right, in that case, that period needs to be included while computing the lease term. If only lessee has the right to terminate, in that case, you need to see whether lessee is reasonably certain that he will not going to terminate, right? In that case, if lessee is reasonably certain that he is not going to terminate the contract, that period will be considered, will be included in the lease term, in the lease period, otherwise not, right? Then we discussed the lease term is required to be reassessed if there are some facts and circumstances which has been changed, right? For example, last year the lessee was thinking that yes, I am going to avail the optional renewal period, but today's circumstances, forces the lessee that don't renew the renewable period, right? In that case, of course, your estimation may change and you have to do the modification of the lease liability and ROU asset. You remember we talked about the modification also. So it leads to the modification. Okay. Then we discussed the meaning of lease payment, and we discussed out of the four leg of the lease contract, we discussed identified asset, we discussed right to control the use, we discussed lease term. Now we are discussing consideration, which is lease payment. There are five considerations from the perspective of the lessee, five plus one from the perspective of the lessor. So if you are computing the lease payment from the perspective of the lessee, these five items needs to be considered. If you are computing the lease payment from the perspective of the lessor, then this sixth item needs to be considered. In one of the CA final examination, the question was asking the lease payment from the perspective of the lessor. And most of the students have answered the lease payment from the perspective of the lessee. For example, these six item has been given to you in the question, right? And the question is asking the lease payment only from the perspective of the lessor. In that case, of course, you need to include fixed payment plus in substance fixed payment plus variable lease payment depending on the index plus exercise price in case purchase option is given plus penalties for terminating the lease plus residual value guarantee given by the lessee. These are the five from the perspective lessee. But the question also says that one of the holding company of the lessee has given a guarantee to the lessor for the residual value amounting to rupees 10,000. So, from the perspective of the lessor, if any third party relating to the lessee or any individual party has given any residual value guarantee, that is required to be considered under the lease payment from the perspective of the lessor, right? You need to see, you need to carefully read the question. You need to see what is the ask of the question, what is the demand of the question. You should not behave like a chat GPT or like Alexa or like a robot. First of all, you need to think about what is the demand of the question. If the question talks about lessor, then something trigger into your mind. Lessor means थोड़ा सा ज्यादा. लेसोर का मतलब छह चीजें आएंगी, लेसी का मतलब पांच चीजें आएंगी, राइट? लेसी का मतलब पांच चीजें आएंगी और लेसोर का मतलब कितनी चीजें आएंगी? छह चीजें, राइट? सिक्स एलिमेंट्स आर देयर इन द लेसोर. लेसोर इज अ ओनर ऑफ द प्रॉपर्टी, सो इट मींस लेसोर एक बड़ा आदमी है, प्रॉपर्टी का ऑनर है, राइट? एसेट का ऑनर है, तो ऑनर है तो उसकी लीज पेमेंट भी ज्यादा होंगी, राइट गाइज? हैव यू अंडरस्टूड, नॉट अंडरस्टूड? क्लेश, कुसुमा, श्रुति, रजनीश, राहुल, नेहा, रिधिमा, I hope you guys are enjoying this revision, right? So after that, we discuss the interest rate. Of course, for discounting, you will require an interest rate. You are a lessee, you are doing a discounting accounting. So if you are doing a discounting, okay, in that case, you need an interest rate. What should be that interest rate? So the first priority is interest rate implicit in the lease, means the interest rate which is finalized by the lessor. But being a lessee, how come I aware about the interest rate implicit in the lease in the books of the lessor? I will not be aware of that fact. In that case, what will happen? In that case, what will happen? The lessee's incremental borrowing rate needs to be taken. What is incremental borrowing rate for me? If I'm going to a bank, and I'll take a loan equivalent to the lease term, equivalent to this amount, what should be the interest charged by the banker from me, right? That will be the lessee's incremental borrowing rate. That will be the lessee's incremental borrowing rate. Right, friends? Is that clear? Initial direct cost. Initial direct cost. Okay. Rajnish is saying not understood. Rajnish, what you have not understood, please tell me. I'm only making a revision out of this, right? I'm only reiterating what I have already covered in the last four class. If you have already attended last four sessions, probably you have understood. Initial direct cost, at so many times you will find that initial direct cost is also required to be added to the right of use asset. It is also required to be added to the asset of the lessor. So what is initial direct cost? Initial direct costs are those costs which are required to be incurred just because of entering into the lease contract, right? Just because entering into the lease contract. Friends, then we have discussed the accounting in the books of the lessee, and then we discussed the lessee has to recognize a right of use asset on the basis of present value of future lease payments, right? First, number one, sir, what is lease payment? I have already discussed. Plus, if the lessee has given any money in advance prior to the commencement date, that is also required to be form part of the right of use asset. Plus, if lessee has incurred any initial direct cost like brokerage, like commission, like royalty, stamp duty, legal expenses. These are also required to be added to the right of use asset. Okay. Plus, if there is any provision for dismantling, it is the same provision which we have read, asset retirement obligation, site dismantling obligation in our Ind AS 16. So if there is a asset retirement obligation, site restoration obligation, so that present value of that site restoration obligation will also form part of your right of use asset, right? And we exemption, I'm coming on that. Then friends, we have discussed the subsequent measurement, that this right of use asset has to be depreciated over the lease term on a straight line basis. Subsequently, the lessee has to either apply a cost model or a revaluation model. The lessee has to charge impairment if the recoverable value of the right of use asset becomes lower than the carrying value of the right of use asset. Right? For depreciation, if the lessee has a right to purchase that asset, the lessee has a option of right to purchase. In that case, the asset has to be depreciated over the life of the asset, right? But if the lessee does not have a right to purchase, in that case, the asset has to be depreciated over the lease term. Right? Lease liability, the lease liability has to be compounded by interest and paid by the lease payment and deducted by the lease payments, right? So this is what we have discussed, right, friends? Then, so these all examples we have already covered. Then, friends, we have discussed modification of leases, right? And we discussed if subsequently the scope of the lease is increasing or decreasing, right? The consideration of the lease is increasing or decreasing. The lease term is increasing or decreasing, which were not form part of the initial contract, right? Then it is known as a modification, and modification accounting is applicable. And then we discussed if there is an increase in the scope, means the scope is increasing. Earlier it was 2 rooms, now 3 rooms have been taken on a lease. If the scope is increasing, and of course, if the scope will increase, rental will also increase. And this rental is in line with the fair value of the market rental, right? It is in line with the increase in scope is in line with the increase in the rental on the fair value basis, right? In that case, that increase has to be taken as a new lease contract. But if there is an increase in the scope, but lease rental is not in line with the increase in the scope, there is a only increase in the lease term, nothing is changing, only lease term is changing. There is only change in the consideration, nothing is changing, only consideration is changing. Then you have to remeasure the lease liability on the date of modification. If lease liability is increasing, you have to increase your right of use asset also, right? If lease liability is decreasing, you have to decrease your right of use asset also. The adjustment has to be made in right of use asset. Then friends, if there is only a decrease in the lease term, or only there is a decrease in the scope, either there is a decrease in the lease term or there is a decrease in scope, in that case, you have to de-recognize the lease liability and right of use asset partially, right? And if there is any differential, it has to go to the P&L. Okay. This is what we have discussed in the last class. Then friends, we have discussed the lessor accounting. And in the lessor accounting, we have discussed the finance lease and operating lease. There are two concepts in lessor accounting. It is a finance lease and operating lease. What is a finance lease and what is operating lease? We have discussed in case risk and reward has been transferred, it is considered as a finance lease. If the risk and reward has not been transferred, it is considered as an operating lease. There are few indicators, few examples of finance lease is also given in the standard, and the same example was there in AS 19. First, ownership related. If in the lease contract it is mentioned that the ownership has to be transferred to the lessee by the end of the lease term, it is known as an example of a finance lease. If there is a purchase option, means the lessee has an option to purchase the asset at a very reasonable price. In that case, it is again an example of finance lease. Lease term. If the lease term covers the major part of the economic life of the asset, right? For example, the life of the asset is 10 years and the lessor has given this asset over a lease term for a period of, let's say, more than 75%, which is let's say more than 7 or 8 years, it will be considered as an example of finance lease, right? Present value of minimum lease payment. If the present value of minimum lease payment is equivalent to present value of minimum lease payment is equivalent to what? It is equivalent to the fair value of the lease asset. It is an example of finance lease. If the asset is a specialized nature, the lessor has constructed, manufactured, the lessor has modified the asset only relating to the lessee, only for the use of the lessee, again it is an example of finance lease. So these are the examples which were given. Then we discussed, in case of operating lease, the lessor has to continue recognizing the asset. Asset accounting will happen as per Ind AS 16. Whatever lease rental lessor is earning, lessor will credit his P&L as an income by the lease rental. Accounting entry is bank account debit to lease rental account, right? And lessor will continue to depreciate the asset as per Ind AS 16. If it is a finance lease, the lessor has to de-recognize the asset, right? Whatever is the carrying value, lessor has to de-recognize. Lessor has to recognize the finance lease receivable on the basis of present value of future lease payments plus present value of unguaranteed residual value, right? Future lease payment plus unguaranteed residual value is known as gross investment in lease. The discounted value of gross investment in lease is known as net investment in lease. Known as net investment in lease, right? So finance lease receivable has to be debited, asset has to be credited. If there is any difference, it will go to the loss on derecognition. This is what we have discussed in the last class, right? After that, friends, we have discussed the exemption with respect to Ind AS 116 accounting. Exemption with respect to 116 accounting, right? Because so far we have understood, in case of Ind AS 116, the accounting is not pretty, simple, and it is not simple, right? It is not straightforward. So when you are running a business, there are so many leases around it. The leases does not consist only of property leases. मतलब ऐसा नहीं कि खाली आपने ऑफिस लीज पे लिया है, आपने अपना गोडाउन, वेयर हाउस, आपने गेस्ट हाउस लीज पे लिया है. There are so many lease contracts, right? Like there are so many lease contracts, like companies are taking laptop on lease basis, printer on lease basis, vending machines, coffee, tea, vending machine on a lease basis, right? So companies are taking vehicles on a lease basis. Companies are taking small premises on a lease basis. So companies are taking so many items, so many, things on a lease basis. Now, what happened at so many places, the lease contract belongs to a very smaller period, like less than a year, or it is just for an year, right? It is just 1 year. Now, what happened if the lease contract belongs to an year? Then standard has given a leeway, standard has given an option. And what standard has given? The standard has called it as a short-term leases. If the lease period, when I'm saying lease term, lease period, again you have to remember the definition of the lease term. If the total of the lease term definition comes out to 12 months or less, it will be considered as a short-term lease. And the lessee can choose, the lessee can opt not to do the Ind AS 116 accounting on such short-term leases, right? But this option needs to be availed by the class of the asset. For example, if the lessee has taken 5 cars on a lease basis, all these 5 cars, so let's say 2 are Maruti cars, 2 are Hyundai cars, and 1 is Mercedes or BMW, where the lease rentals are very high. Now, what happened? Of course, it is a car. The block of asset, if I talk about the class of asset, it is a car, right? So lessee cannot say that for these Maruti and Hyundai car, I will apply simple thing. I will avail the exemption. But for this Mercedes or BMW car, I will not avail the option. Means I will do the Ind AS 116 accounting, right of use and lease liability accounting. Right. The lessee cannot say that. If you want to avail this exemption, you have to avail this exemption on an entire class of asset, not only a single or few assets in that class. You have to avail the exemption to the entire class of asset. Sir, let's say the lessee has 5 cars and 2 car lease term is more than 12 months, but 3 car lease term is less than 12 months. So first of all, for more than 12 months, you cannot apply this exemption because it is not a short-term lease. So for 3 cars, it is a short-term lease. So on these 3 cars, if you want to avail the exemption, you have to avail on all these 3 cars. You cannot say that on 1 car I'll not avail, on 2 car I'll avail. You cannot say that, right? Is that clear? So a lease that contain a purchase option is not a short-term lease. A lease that contains a purchase option is not a short-term lease. For example, if the lease contract is only 8 months, but it includes a purchase option given to the lessee, in that case, you cannot apply this exemption of short-term lease, right? So in your examination question, there will be a big question, for example. So there will be a 10, 11, lines consist of that question. And a very small line which is given is, the lessor has also agreed to provide a purchase option to the lessee at the end of the lease term. Right. And the entire question was talking about the lease period is 8 months, 9 months, whatever. It's a very small amount of time contract, and the lessee got an advice that the lessee should avail this exemption. Right. While reading this question, you were always thinking that, oh, this is a short-term lease. Yes, lessee can avail this exemption. So you have to remember this important fact. You have to remember this important fact that although it is a short-term lease, but exemption cannot be availed. Why? Because the purchase option is given in this contract, right? So this is one of the key to this aspect only, right? You need to remember this thing. Okay, sir, if this lessee will avail the exemption, then what accounting will happen? Simple. Expense has to be accrued, right? Lease rental expense has to be accrued, right? On a regular basis, lease rental expense has to be accrued. So accounting is lease rental expense account debit to bank account. Right, friends? I hope it is clear to all of you. Rajnish, I haven't got the answer. You just have mentioned that not understood, but what you haven't understood, I haven't got the reply. Yeah. So please let me know. Right. If you have not understood any specific part, I would be happy to, again explain. I would be happy to explain it again. Now coming to the low value leases. What is meant by low value leases? Right. Friends, let me summarize what is low value leases. Friends, first of all, I'm sure that you guys are pursuing your articleship, right? You all are CA final students and you are pursuing your articleship, I'm sure. Okay. Since you are pursuing your articleship, now what happened? When you went to any company, you must have seen printer, laptops, mobile phones. You must have seen those equipments. When you went to the cafeteria or pantry, you must have seen the tea or coffee vending machines. This Costa or Cafe Coffee Day, CCD machines. Have you seen those machines? Tea machines, coffee machines. Have you seen those machines? Have you seen the printer, laptop, office equipment, furniture, right? So friends, when this Ind AS 116 was started getting drafted by the global standard setters, one question was raised by the participants of that board, right? And when the exposure draft has been circulated to the industries, so one of the question was asked by so many people in the industry also, while doing our business, like Reliance Industries Limited, it's a big company. It's a I would say Indian multinational company located in so many countries and a huge market size, and the balance sheet is like 15 lakh crore, right? So huge numbers, and it's not only one Reliance. It's there are so many companies. If you take the example of any Nifty 50 companies, any big companies, you will find that there is so many leases, there are so many leases in their balance sheet for small item, because these company also does not wants to make their FAR very heavy. For small item, they want that let's take on lease, and so that the responsibility of the maintenance also lies to the lessor. If I talk about the aviation company, airline company, even all the aircrafts are on a lease basis, right? So normally in a business, so many leases are there in the balance sheet, so many leases, right? And even the small items leases are also there. Small item leases are also there. Okay. So the question which was raised, sir, if I have taken a laptop on a lease basis, I am a company like Maruti Suzuki India Limited. I have a turnover of, let's say, 50,000 crores, 60,000 crores. I have a bottom line which is profit of, let's say, 5,000 crores. I have a balance sheet size of 25,000 crores. And I took a laptop on a lease basis. Right. So in that case, do I need to, although this laptop I have taken on a lease basis for a period of 3 years, let's, right? For a period of 3 years. Short-term lease exemption is a different thing, right? So this is a low value lease exemption. So first of all, the question which arises, if I have taken a laptop on a lease basis for a period of 3 years, and what happened? The value of the laptop is maximum 1 lakh rupees, maximum 80,000 rupees or 1 lakh rupees or 50,000 rupees, the laptop which is given to the employees. So the cost of the laptop is 1 lakh rupees. And let's say the lessor will charge a monthly rental of close to, let's say, 4,000 rupees. In a full year, the lessor will charge 50,000 rupees. In 3 year, lessor will charge 1.5 lakh rupees. So for this item, should I do this Ind AS 116 accounting? Means I need to compute the present value of the future lease payment. I need to recognize as a present value. I need to recognize this, right? As a ROU asset. I need to credit the lease liability. I need to debit ROU asset. I need to credit lease liability. Okay. I need to do all this stuff. ROU asset to lease liability. Okay. Then I need to depreciate over a period of 3 years. Then I need to unwind my lease liability by compounding the interest and paying the lease liability, paying the lease rental. So friends, first of all, let me give you a practical thought here. In industry, this right of use asset accounting and lease liability accounting requires to maintain a complete schedule in the lease tool, right? When this Ind AS 116 came, a lot of big companies have started, a lot of big four and other IT companies have started selling the lease accounting tool in 1 crore, 2 crores, 50 lakh rupees, 30 lakh rupees. They have started, selling this lease tool. Why? Because they're aware that this is not a simple calculation. Now, friends, the question which was there with the board, whether do we need to require the lease accounting, this 116 accounting for all the small leases? Then the answer which is given by the board, no. You are not required to do this Ind AS 116 accounting, this lease accounting, this detailed long-term accounting, right? This long-term accounting for small item. Like you have taken a printer on a lease basis, laptop, computer, tablet, telephones, mobile phone, right? You are not required to, these are considered as a low value item, right? So you're not required to do this Ind AS 116 accounting to these items. Okay. Sir, then what we are required to do? You are just required to do the expense accrual accounting. Every month you are paying a rental, please debit your lease rental expense account, debit to bank account. That's all. Right? That's all. Sir, whether we need to look at for considering is it a low value? How can I consider is it a low value? Friends, practically the companies are making a policy, right? For example, like company like a Reliance, whose profit is let's say 50,000 crore, 40,000 crores, whether 5 lakh rupees, 10 lakh rupees is material for them. Even their balance sheet, their P&L, their financial statements are presented in crores, right? Their numbers are presented in crores. So whether 10 lakh rupee is a material value for them, right? Standard says that for considering is it a low value asset, right? You are required to see, for considering is it a low value asset, you are required to see what is the value of the new asset. For example, you have taken a car on a lease basis. The car is 5-year-old car, right? If I talk about the value of this 5-year-old car, probably the value should be 5 lakh rupees. But, and let's take an example of Hyundai Creta. So you will get a 5-year-old Hyundai Creta car at a cost of let's say 7 or 8 lakh rupees. But if you need to buy a new Hyundai Creta car, it will cost you 15 lakh rupees. Standard says that while assessing is it a low value asset, you need to consider the value of the new asset. You are not required to consider the value of the old asset. You are required to consider the value of the new asset. For example, Reliance has made a policy that any item below 10 lakh rupees, any individual lease item below 10 lakh rupees is considered as a low value item. And let's say they have taken 5 BMW car on a lease basis. For example, they have taken 5 BMW car on a lease basis for their top employees. So each BMW car cost, let's say 70 lakh rupees or 75 lakh rupees. Now what happened? If each BMW car cost 75 lakh rupees, is it a low value asset? Answer is no. If I consider from the Reliance perspective, it is nothing. For 75 lakh rupee for Reliance is nothing. But they have made a policy that any amount up to 10 lakh rupee is considered as a low value item in for the perspective of leases, right? So this is a 75, the cost of the new asset is 75 lakh rupees. So in this case, the company cannot avail the low value lease exemption, right? So first of all, friends, in standard, no threshold is given in the standard, right? In IFRS standard, 5,000 US dollar threshold is given in IFRS standard. So 5,000 US dollar consists of, let's say, how much? 4 lakh or 4 lakh 50,000 rupees, close to 5 lakh rupees, right? But in Ind AS, no threshold is given. So companies are making a policy, companies are making a rule, right? That what should be low value for them according to their materiality policy, right? So they are saying whether 10 lakh is material for them, 20 lakh is material for them, or let's say 5 lakh is material for them, right? So they are making a policy. They are making a policy. Okay. So like Reliance, I have told you, if they have make a policy of 10 lakh or 15 lakh rupees, so any individual new item which is taken on a lease, any individual item which is taken on a lease, the cost of the new item is up to 10 lakh rupees, it is considered as a low value leases. And Ind AS 116 accounting is not required. What is the required? Expense to bank accounting is required. Friends, like a short-term lease, I have told you that if a purchase option is there, it is not considered as short-term lease for the purpose of exemption. Likewise, in case of a low-value leases, at times what happen. For example, I have taken and I am giving you an example of, you know, in Delhi, there is an area called Lakshmi Nagar, right? So what happened after COVID, since these classes are happening, started happening on this, what should I say, on a web basis, right? On a live basis, on a web basis, right? So what started happening, like Zoom call is there, like Teams meetings are there. So I know few of my friends, what they have started, they create a company, okay? And they took some laptop on a lease basis. They took some laptop on a lease basis, right? You know what is their objective? Their objective is not to use the laptop in their business. Their objective is to sublease those laptops, sublease those computers. Like, मैंने एक कंप्यूटर लीज पे लिया और श्रुति ने बोला कि सर मुझे एक महीने के लिए कंप्यूटर चाहिए, राइट? Shruti has to complete some project, and that is why Shruti has, Shruti has, you know, has to make some project, and Shruti ने बोला कि सर मुझे 1 month के लिए एक कंप्यूटर चाहिए लीज पे, because I'm only requiring for 1 month, so I don't want to invest 50,000-60,000 rupees in the laptop, and hence I am needing a laptop for 1 month only. She told me, sir, what is the lease rent for that? I told 5,000 rupees. She is happy because instead of paying 60,000 rupees, she will pay 5,000 rupees, and her job will over, right? Now the question is, what happened? I have taken this laptop on a lease basis, and I am subleasing this laptop to the different employees. Sorry, different customers. So what is the objective? Is it a low value lease? Answer is yes. But since I am subleasing these laptops, so this lease is known as a head lease. Head lease means primary lease, main lease, right? So standard says that if the lessee is subleasing that lease asset, in that case, this low value lease exemption will not be available. If a lessee subleases an asset or expect to sublease an asset, the head lease does not qualify as a lease of low value asset, right? So in this case, the company of my friends who have taken the laptop on a lease basis, since they are subleasing these laptops or decided to sublease these laptops, so they cannot avail the low value lease exemption with respect to such laptops, right? I hope it is clear to all of you, friends. I hope it is clear to all of you. Is that clear to all of you or not? Please tell me whether this low value leases is clear to all of you or it is not clear. We have discussed two exemptions. One is short-term leases and another one is low value leases, right? We have discussed two exemptions. Jigar is asking, employee will be lessee. Jigar, I haven't understood your question. So thank you, Rajneesh. So Rajneesh has mentioned now understood, sir. Salesh is saying, sir, that means no need to capitalize asset. Am I correct? Yes, Salesh, in case of short-term leases and low value leases, there is no need to capitalize the right of use asset, not an asset, right of use asset. Right of use asset, I'm saying. Okay. There's a difference between asset and right of use asset. Friends, now I am discussing a new concept. So friends, we have discussed the exemption with respect to short-term leases and exemption with respect to low value leases. Now I have two concepts which is remaining, which is another one is sublease accounting, and the next one is sale and lease back. These are the two concepts which I have to cover right today. So let's cover the sublease concept. Friends, what is meant by sublease? Tell me what is meant by sublease. Recently, I have taken an example. Sublease means, let's say, Abdul. Abdul is having a building in Lakshmi Nagar, Delhi, right? So I was looking for a lease premises. I was looking for a building on a rental basis. So I went to Abdul, and Abdul told me that, sir, I have a building which is situated in Lakshmi Nagar. I said, Abdul, what is the area of this building? Abdul told, sir, it is a 3 bedroom on each floor, and this building consists of 4 floors. This building consists of 4 floors, right? So, friends, Abdul is a lessor. I am the lessee. Okay, I have taken this building on a lease basis from Abdul. I am paying 50,000 rupees monthly lease rental to Abdul. Now, why I have taken this building in Lakshmi Nagar on a lease basis? Because I know that every year around 5,000 students, 5,000 fresh students coming to Lakshmi Nagar every year, right? For taking a coaching of CA Inter, CA Final, for preparing for CAs, right? So my objective is to sublease this building, right? I will put a caretaker on every floor, 4 caretaker I'll put, and I will sublease these rooms, these buildings, sublease these asset to the CA aspirant. So now I have become the lessor. So let's say Jigar came to Lakshmi Nagar, and I have given 1 floor to Jigar on a lease basis. So now Jigar is saying I am the lessee and Alok sir is the lessor. And I am saying I am the lessee and Abdul is the lessor. So if you will see this entire transaction, Abdul is the lessor, Alok Garg is the lessee. Alok Garg is the lessor, Jigar is the lessee. So if you will see, the ultimate lessee is Jigar. The ultimate lessor is Abdul. Alok Garg is a intermediate lessee and intermediate lessor. So in the first contract between Abdul and Alok, Alok Garg is saying I am the lessee. In the second contract between Alok Garg and Jigar, same Alok Garg is saying I am the lessor. So Alok Garg is lessee as well as lessor, right? For the first contract, he is the lessee. For the second contract, he is the lessor. Now the question arises. For Abdul, accounting is pretty simple. Abdul will do the lessor accounting. For Jigar, accounting is pretty simple. For Jigar, accounting is pretty simple. Yeah. For Jigar, accounting is pretty simple because whatever the lease rental Jigar will pay, so whatever is the lease term, Jigar will capitalize right of use asset on the basis of present value of the future lease rental, right? But what about the accounting in the books of Mr. Alok Garg? Because in the first contract, he has to do a lessee accounting. In the second contract, he has to do a lessor accounting. Are you all agree with me? Have you understood this thing or you haven't understood this thing? In this arrangement between Abdul, Alok and Jigar, Alok Garg is an intermediate lessor and intermediate lessee, right? So Alok Garg has to do a lessee accounting as well as a lessor accounting. Now, how this accounting needs to happen? So this sublease accounting is given in Ind AS 116, right? So friends, I will discuss that how this sublease accounting will happen. Clear? Okay. So before that, let me look at the query screen. Jigar is saying, sir, sublease understood. अभी एग्जाम्पल आपने लिया था, जो अभी लैपटॉप आपने श्रुति को दिया था वो. ओके. Kusuma is saying, sir, these low value lease can be given in exception in scope of lease. Since we are not accounting as per Ind AS 116, but not why? Very valid question, right? Made by Kusuma. And Kusuma is saying, sir, low value lease exemption can be scoped out in the scope part itself. But why it has not been covered in the scope part? So first of all, Kusuma, why it has not been covered? Probably if the threshold would have been defined, for example, if it is written that any new asset up to rupees 5,000 costing, or let's say up to 5 lakh rupees costing, will not be taken into the accounting as per lease, right? So probably if that could be the scenario, probably it can be scoped out from the Ind AS 116 itself. But what happened, Kusuma? For example, any asset. I have taken a laptop on a lease basis, and you have also taken a laptop on a lease basis. It could be low value for me, but it may not be low value for you. An item which is not material for me, it could be material for you, right? So I am a chartered accountant and I have qualified, 17 years back, 16 years back. I am earning a handsome amount of money. If I would have incurred a loss of 10,000 rupees, it may not impact me a lot. But being a student, if you will incur a loss of rupees 10,000, I'm talking from your individual capacity. I'm not talking from your parental background. I'm talking from an individual capacity. Since you are a student, you are earning a stipend of, let's say, 2,000 or 3,000 rupees, right? So probably if you will incur a loss of 10,000 rupees, it is a material for you. So first of all, low value leases. A same lease can be a low value for one company. It may not be a low value for another company, right? So it could not be given in the scope part. That is number one. Number two, doesn't matter. Doesn't matter. It is a low value lease for a company, for a lessee. But what about lessor? Ind AS 116 accounting does not only cover lessee accounting, it covers lessor accounting also. So for lessor, the accounting will remain same. The lessor is not doing any right of use asset accounting. Lessor is looking at just whether it is a finance lease or is it a operating lease. So lessor accounting, from the lessor accounting perspective, there is no concept of short-term lease. There is no concept of low value lease. Is that clear? So lessor accounting will remain same. If it would not have been covered in the scope part, probably it may be construed like this entire short-term lease or low value lease is out of the scope of Ind AS 116, which is not right. For lessor accounting, it is within the scope. And that is why this exemption is given with respect to the lessee, right? When you are learning, when you are reading, when you are understanding lessee accounting, there this exemption is given, right? I hope you have understood, Kusuma. Let's discuss the sublease accounting. And to discuss this sublease accounting, I have taken an example. Life of car is 10 years, right? I have taken an example. For example, the life of a car is 10 years and A Limited. Who is A Limited? A Limited is Abdul. You remember? Abdul has given the building on lease basis. So A Limited is the head lessor. He is the one who is the owner of the asset, and first time he is giving this asset on a lease basis. A Limited leases a car to B Limited for a period of 7 years. So B Limited is a head lessee. Who is B Limited? B Limited is a head lessee. right? So B Limited is the primary lessee. Like in that example, Alok Garg, me, is the primary lessee, right? Head lessee. And B Limited is also the intermediate lessor. B Limited is also the intermediate lessor. Intermediate lessor means I have given this building on a lease basis to Jigar. So I become intermediate lessor also. A Limited leases a car for 7 years to B Limited. B Limited subleases this car for 5 years to C Limited. Right? So B Limited has a right to use of this car for 7 years. Out of the 7 year, B Limited has subleased this car to C Limited for 5 years. Right? At the max, B Limited can sublease this car to C Limited for 7 years only. 7 साल से ज्यादा तो B Limited कर ही नहीं सकता बिकॉज B Limited के पास राइट सिर्फ 7 साल का है. Right? I hope this is clear to you guys. So in this question, A Limited will be considered as a head lessor. B Limited will be considered as a head lessee or intermediate lessor. C Limited will be considered as a ultimate lessee. Right? So let's discuss this accounting. Let's discuss this accounting with the help of the number. Please confirm if my Excel sheet is visible to all of you. Please confirm. Please confirm if the Excel file is visible to all of you guys. Is it visible? Okay. So this question is clear to all of you. Car, let's say a sublease accounting. Sublease accounting. A Limited leases car to B Limited for 7 years. B Limited subleases this car to C Limited for 5 years. Right? Life of car is equal to 7 years. Sorry, 10 years. Right? Lease rental charged by A Limited is 10,000 per year, payable at the end, payable at the end of the year. Right? Same lease rental charged by B Limited. B Limited is, let's say, is 12,000 per year, payable at the end of the year. Right? Discount rate considered by all the parties is 10%. Paul, you need to do this accounting in the books of A Limited and B Limited, right? First of, there are two contracts. There are two contracts here, right? If I talk about the solution, A Limited is considered as the head lessor. He is the primary lessor. Head lessor, or I can say as a primary lessor. P Limited in this question is the head lessee. Head lessee or primary lessee. And he is also considered as an intermediate lessor. C Limited will be considered as a ultimate lessee. C Limited is considered as an ultimate lessee. All right. C Limited is considered as an ultimate lessee. I hope it is clear to all of you. Yeah. So A Limited is a lessor, and This life of the asset is 10 years and he has given for 7 years. So roughly 70%. Roughly 70%. Life is 70%. So in this case, what happened? The less first contract one. If I talk about the contract one is between A and B, A limited and B limited, and B limited. So what happened in the books of A limited? In the books of A limited, in the books of A limited, in the books of A limited, what accounting will happen? Lessor accounting. Lessor accounting will happen. Lessor accounting will happen, right? Lessor accounting will happen in the books of A limited. Let's say, let's consider the life of the car is, let's say, 9 years. Okay. So if I talk about lesser accounting, A limited has given this car for 7 years out of the total life of 9 years, means are close to 80%. So A limited will do the finance lease accounting. Finance lease accounting means what is finance lease accounting? Means A limited has to de-recognize. A limited will de-recognize the car and the recognize the finance lease receivable. Finance lease receivable. A limited will de-recognize the car and recognize the finance lease receivable. Right? Is that clear, friends? Is that clear? What B limited will do? What B limited will do in the books of B limited? In the books of B limited, lessee accounting will be required in the books of B limited. There is no operating lease and finance lease. There is a lessee accounting. And what lessee will do? Recognize ROU asset and lease liability. So what lessee will do? Lessee will recognize ROU asset and lease liability. So at what value? Year, lease payment, present value factor, present value, right? So year one, when your lessee will pay the lease rental. So I'm doing the primary lease accounting. 10,000 is the lease rental every year, which this B will pay to A. What is the present value factor? 1 divided by 1.1. This divided by again 1.1. Sorry. Divided by 1.1 is the this is the value in the books of B limited, and B limited will pass an accounting entry. Right of use asset account debit to lease liability, right? Credit, right? This right of use asset will be depreciated over the life of 7 years, and this lease liability will be compounded with 10% interest and deducted by 10,000 rupees of lease payments, right? You can see the total lease payment is 70,000. The total lease payment is not 10,000. The lease payment is 70,000. The total lease payment is 70,000. And the present value is 48,000. Means the difference between 20 and 48 is 21,315, which is interest, right? So initial liability is 48,000. This liability will go up to 70. and 70 has been paid, right? So I hope you guys are okay with this accounting between A Limited and B Limited. You guys are okay? A Limited has done the finance lease accounting, right? B Limited is doing ROU and lease liability accounting. Please let me know if you have any question, any challenge. Please let me know if you have any question, any challenge so far. Very simple accounting. I have just done the accounting between the head lessor and the head lessee. पहले कॉन्ट्रैक्ट की मैंने अकाउंटिंग करी, लेसोर अकाउंटिंग करी और लेसी अकाउंटिंग करी. सिंपल, right? Now let's move to the contract number 2. What is the contract number 2? The contract number 2 is B Limited subleases his car to C Limited. Contract number 2. Right? B Limited and C Limited. B Limited and C Limited. This is my contract number 2. My contract number 2 is B Limited and C Limited, right? And in the books of A Limited, this is the head lessor. Just forget about A Limited, right? A Limited has done accounting, what he has to require to be done. The main accounting lies in the books of B Limited, right? The main accounting lies in the books of B Limited. Okay. In the books of B Limited, an asset and liability has been accounted for. Asset is 48,000, liability is 48,000, right? Right. Now, on the same date, this B has entered into a lease contract with C. Now this same B Limited has become the intermediate lessor, right? In the contract between A and B, A Limited was head lessor or the primary lessor, and B Limited was head lessee or primary lessee, right? Now what happened in the contract between B and C, this B Limited has become an intermediate lessor. This B Limited has become an intermediate lessor. This B Limited has become an intermediate lessor. Right? So now in the books of B Limited, the lessor accounting is required to be done in the books of B Limited. The lessor accounting is required in the books of B Limited. Any challenge, any doubt? Because B Limited is become a lessor now. The lessor accounting is required in the books of B Limited. Now, friends, if lessor accounting is required, you have to do the lease classification. You have to do the lease classification. Is it a operating lease or is it a finance lease? So, friends, while doing the lessor accounting in the books of intermediate lessor, right, you need to see out of the lease period which this intermediate lessor is having, बी लिमिटेड के पास जो लीज पीरियड है, बी लिमिटेड को जितने पीरियड के लिए लीज पे एसेट मिला है उसमें से कितने पीरियड के लिए बी लिमिटेड उस एसेट को लीज पे दे रहा है, राइट? इन केस ऑफ ए लिमिटेड जो मेन लेसोर था, उस केस में ए लिमिटेड वाज कंपेयरिंग द लीज पीरियड विद द लाइफ ऑफ द एसेट, बट हियर बी लिमिटेड कैन नॉट कंपेयर द लीज पीरियड विद द लाइफ ऑफ द एसेट. व्हाई? because for B Limited the entire life of the asset is only 7 years, because after 7 years B Limited has to return the asset. Are you getting me or you are not getting me? So what is and what is the asset with B Limited? For A Limited the asset was car. For B Limited the asset was not car. For B Limited the asset was right of use asset. For B Limited the asset was right of use asset. What is the life of right of use asset? 7 years. 7 years. Out of 7 year, for how many year? B Limited, for how many year B Limited is giving the asset to C Limited? 5 year, right? In this case, the lease classification will depend on the lease period of sublease comparing with the lease period of main lease, right? Comparing with the lease period of main lease. Comparing with the lease period of main lease, right? Comparing with the lease period of main lease. Clear? In this case, what is the lease classification? In this case, the lease classification is what? So total life is 5 year. The life at which B is giving to C is 5 year out of 7 year, which is close to 72%, right? So roughly, it will be considered as a finance lease, right? It is means more than 70%. It will be considered as a finance lease. It will be considered as a finance lease, right? In this case, what will happen? In this case, what will happen? The lessee will recognize again, sorry, lessor will de-recognize the right of use asset and recognize finance lease receivable, right? And recognize the finance lease receivable. Is that clear? Is that clear or not clear? This lessor will de-recognize the right of use asset and recognize the finance lease receivable. Is this clear or not clear? Yeah. What accounting entries is B will pass? First of all, B will compute the present value of the future lease payment for the finance lease receivable. Again, let me take this example for 5 year only. Year 1, 2, 3, 4, 5, right? This is the 10,000 is the B Limited will receive 12,000. 12,000. So the total finance lease receivable comes out at 45,000 rupees. So what accounting entry B will pass? What accounting entry B will pass as a lessor? B will recognize finance lease receivable account debit, finance lease receivable account debit, right? By how much? 45,489 to right of use asset, credit by how much? By how much? Right use asset 48,000, right? Debit loss on derecognition, debit 48 minus 45, 3195, 3195. Is that clear? Is that clear? I hope it is clear to all of you. On the commencement date, what are the assets which are lying in the books of the lessee? Sorry, in the books of B Limited. So balance sheet position in the books of of B Limited. What is the balance sheet position in the books of B Limited? In the books of the B Limited, in the first contract, there was a right of use asset, right? And there was a lease liability. What was the lease liability? 48,684. What was the right of use asset? 48,684. But in the second contract, the finance lease receivable come into the picture, right? How much? 45,489, right? And this has become zero. Okay, right? This has become zero. So, and there is a loss which went to the retained earnings. Loss of how much? Minus 3195, right? So this is what is the balance sheet position of this transaction, right? In the books of B Limited, finance lease receivable will come into the picture. Finance lease receivable will survive and lease liability will survive. This is the liability payable towards A Limited. This is the asset receivable from C Limited. I hope this accounting is clear to all of you, friend. In case of sublease, the only case you have to split the accounting. Like I have split it. I have done the accounting for contract number one, A Limited and B Limited. In the books of A Limited, less accounting, simple. Then I have found the classification. Is it a finance lease? Is it an operating lease? This was a finance lease. So de-recognize the car and recognize finance lease receivable. In the books of B Limited, simple. In the books of the lessee, ROU and lease liability accounting will happen. Simple, right? So what I have done, I have computed the present value of lease payment. I have recognized ROU and recognized lease liability. At the same time, in the contract number two, this lessee become the lessor, B become the lessor, intermediate lessor. So in the books of B Limited, I have to do the lessor accounting because there is another contract also. In that case, I have checked what is the lease classification. And this lease classification, I have checked what is the right which is there with the B Limited. B Limited has the right of 7 years, right? B Limited has the right of 7 years. Okay. Out of 7 year, B Limited is transferring the asset for 5 years. B Limited is transferring the asset for 5 years. Okay. So it means it is like a finance lease. Majority of the life, for the majority of the life, B is transferring the asset to C, right? So for 7 year, B is enjoying the asset only for 2 year. Rest 5 year asset is given to the C. So in the books of B Limited, it become a finance lease. Now B Limited has to de-recognize the asset. What asset? Right of use asset. Because B Limited does not have the car in the balance sheet. B Limited has the right of use asset in the balance sheet, right? So B Limited has de-recognized. What B Limited will recognize? Finance lease receivable. So B Limited will receive 12,000 every year for the period of 5 years. Means B Limited will receive 45,000 rupees out of 48,000 rupees. Even the payment is substantial, right? With respect to the value of the ROU asset. This is the balance sheet position of the B Limited. Now, what is the accounting in the books of the C Limited? Who is the ultimate lessee? In the books of C Limited, what is the accounting? Simple accounting in the books of C Limited, no challenge. In the books of C Limited, what is the accounting? C Limited is the ultimate lessee. So what is the accounting in the books of the C Limited? Again, so let me put this here. Year 1, 2, 3, 4, 5, lease payment. C will pay 12,000. Present value factor 10%. This much. This is the value. Since discount rate is same for everyone, that is why these values are coming same. Okay. Let's say if the discount rate would be 11% in the books of C Limited, then this number would go change, right? What is the accounting in the books of the C Limited? Right of use asset account. Right of use asset account debit. Debit to lease liability. Credit by how much? 45,489. 45,489. Right, this 45,489 has to be depreciated over a life of 5 years. Is that clear, friend? Friends, is that clear or not clear? Please do let me know if this is clear or this is not clear. Yeah, is that clear? Very simple. If I talk about, and I'll again summarize this, let's say in this case, A Limited and B Limited, the original lease contract, A Limited will do the lessor accounting and it will be a finance lease. B Limited will create a ROU asset and lease liability and accounting is done for 7 years, right? But at the same time, in this sublease contract, B Limited will de-recognize the ROU and recognize the finance lease receivable. C Limited will recognize ROU asset and lease liability and accounting will happen for 5 years. This is what we have discussed right now on the Excel file. This is the explanation. In case of sublease, there is a head lessor, there is an intermediate lessor, there is a sublessee, right? If a lessee subleases the underlying asset, then the head lease does not qualify as low value leases. You remember we have discussed we have discussed that if the lessee is subleasing the asset to the other lessee, in that case it will not be considered as a low value lease exemption, right? Low value lease exemption cannot be availed in case of the head lease, right? So head lease, in case, so what is the head lease? Means this original lessee, has created a ROU and lease liability. So if this original lessee wants to avail the exemption, he cannot avail the exemption of creating ROU and lease liability. Why? Because he is subleasing. Okay, right? Intermediate lessor shall classify sublease into finance or operating lease using the following criteria. Right? If it is a short-term lease, 12 months or less, he will classify it as an operating lease. Otherwise, the sublease can be checked with the reference of the period of the lease which is lying with him versus the period of the lease he has given. The ROU life, not the economic life of the asset. This is what is given in this question. This summary will says it all. You have to remember this summary only, right? It says it all. And when you look at the Excel file, you will get the understanding clearly. Friends, please do let me know if you have understood it very well, right? If you have not understood, if you have any question, I would be happy to answer. To simple solve this question, you have to split the contract between the head contract, I mean to say main contract and the subcontract. Please do the main contract accounting, then please do the subcontract accounting. While considering these contracts separate, right? And do step by step accounting. To solve Ind AS 116 problem, the best trick is solve it stepwise. That's all. Right? So friends, it's 8:23 now. And let's have a 7 minutes break. We will start at, it's 8:24 now. We'll start at 8:31, right? And we will cover the last concept of the day, which is sale and lease back. Thank you, friends. And we will meet after 7 minutes. Students, I hope I am audible. Sorry, there was a technical glitch due to the power cut. Yes. So quickly we'll discuss this illustration number 41, right, on this sublease accounting. And in this case, if you read this particular illustration 41, head lease, an intermediate lessor enters into a 5-year lease for 10,000 square meter of office space, the head lease, with entity XYZ, the head lessor. So XYZ is the head lessor, and this an intermediate lessor. So name is not given, only given this intermediate lessor. So this intermediate lessor enters into a 5-year lease contract with the head lessor, right? Then there is a sublease contract at the commencement of the head lease, means whenever this intermediate lessor enters into a contract with the main lessor, right? He also enters into a contract with the ultimate lessee, with the in the sublease contract. The intermediate lessor subleases the 10,000 square meter of office space for 2 years to a sublessee. If I talk about this first lease accounting, in case of a head lessor, of course it is a office space, means it is a building, and the life of the building is much more than 5 year, right? It is way beyond than 5 year. Probably it is 30 year, 40 year, 25 years, right? So it is it has entered into an agreement for 5 years. So in the case of XYZ, who is the head lessor, it is a operating lease accounting. The asset will remain in the books of the head lessor, and and the head lessor will recognize the lease rental income on an accrual basis. The head lessee, who is the intermediate lessor also, this head lessee will recognize the right of use asset, okay, on the basis of 10,000 square meter of office space, on the basis of whatever lease rental he is paying for 5 years. This intermediate lessor, or I would say the head lessee, has to create a right of use asset and lease liability. In the sublease contract, this head lessee will become the intermediate lessor. The total period is 5-year contract. Out of 5 year, he is only giving for 2 year. Again, from the intermediate lessor perspective, it is a operating lease. So this intermediate lessor will continue to recognize right of use asset, and whatever lease rental he is earning, it will be recognized on an accrual basis. Lease rental account debit, bank account debit to lease rental income account, right? And this sublessee, this ultimate lessee, will create a right of use asset and lease liability for a period of 2 years. I mean to say, present value of lease payments over a period of 2 years will be considered as a right of use asset and lease liability. This is how this accounting needs to be happened, right? I hope it is clear, friend. Do you have any doubt? Please do let me know. I need your confirmation. And only after that, I will start this new concept of sale and leaseback transaction. Can I have your confirmation, please? Okay. So let's start discussing the new concept, the sale and leaseback transaction. Right. If I need to summarize, this is the, I would say, most toughest concept of Ind AS 116. Right. But if you understood it very well, if you will break this into the steps, this will also become a very, I would say, simplest concept of Ind AS 116. Right? This will become a very simplest concept of Ind AS 116. So, friends, now what happens? What is a sale and leaseback transaction? First of all, let me clarify what is a sale and leaseback transaction. Friends, for example, I am a, for example, I am a owner of a property, right? I have purchased a property for 1 crore rupees. I am the owner of the property since I have purchased this property, right? And what I have done, so I am using this property for my office purposes. Now I am in urgent need of a money, right? So I am in urgent need of money, and I'm running my business from this office. So what I have done, I went to a I went to a person, and I told that I need money of, let's say, 80 lakhs rupees, or let's say 1.25 crore rupees, whatever. He told me, why should I pay this hefty amount of money to you, right? You should have to give me some security. You have to give me something. I don't know you. How can I give this 80 lakh rupees, 1 crore rupees to you tomorrow if you will not pay? Then what is a recourse which is available to me, right? So then I told him, let's do one thing. Let's do one thing. Let me do one thing. This is my property, and let me sell this property in favor of you. Let me sell this property to you. So while selling this property, now, as of now, this property belongs to me. I am the owner of this property. When I sell this property to you, you will become the owner, right? You will become the owner. But again, the same person is saying that why will I stuck my money in buying this property? I'm not interested in buying this property, right? I'm not interested in buying this property. Let's say if I have 1 crore rupees. So if I have deposited in my bank, I will get an interest out of that, right? I'll get an interest out of that. If I would have invested in the property, right, what should I get? I will be losing my regular interest income. So I told him, don't worry. I'll do one thing. You will pay me 1 crore rupees or whatever, 80 lakh rupees, whatever, right? Let's enter into an agreement. I am selling this property to you. You will pay me 1 crore rupees. Okay. And now you will become the owner of the property, right? And you can lease back this property to me, right? You can lease back this property to me. I mean to say, now you become the owner. Let's enter into another agreement of lease agreement, where being an owner, you will become the lessor and I will become the lessee, right? I will continue to use this property. I am not required to vacate this building. I am not required to vacate this property. I will continue to use this property as it is, right? The only thing is, the form of the arrangement will change. The form of the arrangement will change. So in this particular case, for example, this was the building, and this person was running its office in that building. This person was running that office in this building, right? The only thing is, earlier he was the owner, right? He was the owner, right? Now he become the seller. He become the seller. Okay. At the same time, he become the lessee. This seller has become the lessee. And this person who is a buyer, he at the same time become a lessor. He has become a lessor, right? Being a buyer, he has become the lessor of this building. The building remains same. The seller become the lessee and the buyer become the lessor. Now, what is the benefit to the buyer? The buyer is getting a regular lease rental in terms of installment, right? With some markup. Okay. Right. So this buyer is getting a lease rental. He is getting his return of money. And there is an arrangement that after certain years of, let's say, 10 year, 15 year, this buyer will, buyer will, this property is with the exercise option. With the exercise option means this seller will repurchase this property from the buyer at a very nominal value. Let's say 1 lakh rupees or 5 lakh rupees, right? This is what is the transaction. Now, friends, this sale and leaseback transaction, right? That is why it is known as sale and leaseback. It is sale and leaseback. Okay. So if we will look at this transaction, right, this is a sale and leaseback transaction. Now the question arises, sir, since it is also a sale where the ownership has been transferred and there is a lease where the right to control the use still lying with the seller who is the lessee, who become the lessee now. So standard says that first of all, you need to consider, is it a sale? Is it a sale under Ind AS 115, revenue from contract with the customer? If it is a sale, then you need to recognize some gain or loss on the rights transferred to the buyer, right? On the rights transferred to the buyer. What does it mean? For example, this property belongs to me, right? This property belongs to me. When I'm selling this property, I am transferring the right. When I'm selling this property, I am transferring the rights to the buyer, right? And there may be some gain or loss, right? That gain or loss has to be recognized, right? That gain or loss has to be recognized. If this transfer is accounted as a sale under Ind AS 115, then some gain or loss is required to be recognized on the rights transferred to the buyer, right? And what happened? For the remaining rights, the lessee has to recognize a right of use asset, right? Means, to summarize, let's say if it is concluded that yes, it is a sale under Ind AS 115. In that case, the seller, who is the lessee now, the seller has to recognize some gain or loss on the right transferred to the buyer, and the seller needs to recognize right of use asset for the portion of the carrying amount of the rights retained and a lease liability. This is the seller, and this seller has transferred some rights to the buyer, right? So to the extent of right transferred, the gain or loss is required to be recognized, and to the extent of right retained, the right of use asset and lease liability is required to be created. We will discuss this with the help of an example. If no, the sale has not been considered as a sale and leaseback transaction under Ind AS 115, in that case, the seller needs to recognize a financial liability for the amount received on transfer, and buyer recognizes a financial asset. Let's say if it is concluded that it is not a sale transaction. If it is not a sale transaction, means no right have been transferred to the buyer. Then what happened? Then going by the substance, it is a financing transaction, means it is a loan transaction, right? For example, if I'm selling a property to you and I'm not giving any rights to you, then what is that transaction? That transaction is not a sale transaction. That transaction is a funding transaction. Okay. In that case, whatever money which is received by the seller will recognize a liability and the buyer will recognize an asset. It is just like a loan taken and loan given, right? So this is the premise of sale and leaseback transaction. This is the premise of sale and leaseback transaction. Okay. Whether sale and leaseback transaction is clear, that what is meant by sale and leaseback means a person is selling the property and retaining the property by way of leasing, right? So the seller is become the lessee and the buyer will become the lessor. Right? Why these kind of transactions are happening? These kind of transactions are happening for the sake of liquidity. For the sake of liquidity. Okay, friends. Sale and leaseback transaction is clear. Now, friends, the most important part is to conclude. Let's say if it is concluded that sale and leaseback transaction is accounted for as a sale as per Ind AS 115, then you need to carry 4 steps. You need to carry 4 steps. Step number 1, you need to calculate additional financing, that is sale price minus fair value. You need to allocate lease payment in the proportion of present value of lease payment and additional financing. You need to calculate ROU asset in the books of the seller lessee. You need to compute gain or loss on the sale of right transferred on the asset. Sir, we have not understood anything. Don't worry. First, we will discuss a question, then we will solve that question, and then we will discuss how these steps has to be used in that question, right? So, illustration number 42. This is a very detailed illustration, and this illustration number 42, the entire things will be clear to each one of you. An entity, an entity who is a seller, lessee, sells a building to another entity who is a buyer lessor for cash of rupees 30 lakh. So what is the sale consideration? What is the sale consideration? What is the sale consideration? 30 lakh. Sale consideration is 30 lakh. Immediately before the transaction, the building is carried at a cost of rupees 15 lakh. So the carrying value of the building is 15 lakh rupees, which is a cost. It is at a cost model, but might be the fair value is much more than the cost. If you have purchased a land or a building 5 years ago, right, it is, let's say, at 15 lakh rupees, but now the market value is, let's say, 25 lakh rupees. So you, whenever you will sell that property, you will sell at a market value only. Okay. So the cost was 15 lakh and the buyer has paid a cash of rupees 30 lakh. At the same time, seller lessee enters into a contract with the buyer lessor for the right to use the building for 20 years with the annual payment of rupees 2 lakh payable at the end of each year. So at the time of the sale, at the same time, this seller has entered into the agreement with the buyer to get this property on a lease basis, right? So that the seller will become the lessee and the buyer will become the lessor. And the annual payment of lease rental is 2 lakh rupees every year. And the period is 20 years, means roughly 20 multiplied by 2, 40 lakh. This seller has to pay over a period of 20 years. And what he has got 30 lakh rupees, right? The carrying value is 15 lakh rupees, what is given in this question. The terms and condition of the transaction are such that the transfer of the building by seller lessee satisfies the requirement for determining when a performance obligation is satisfied in Ind AS 115 revenue from contract with customer. So it says that it satisfies the condition of Ind AS 115 and this transfer will be considered as a sale under Ind AS 115. Friends, a very important question. The fair value of the building, a very important fact. The fair value of the building at the date of sale is 27 lakh rupees. The fair value of the building at the date of sale is 27 lakh rupees. The fair value of the building at the date of sale is 27 lakh rupees. What does it mean? What does it mean? It means that the market value is 27 lakh rupees, but this buyer has paid 30 lakh rupees. What does it mean? What does it mean? Why someone will give extra in comparison to the market value? If the market value is 27 lakh rupees, someone is giving 30 lakh rupees. What does it mean? I am selling my property, right? I am selling my property whose market value is 27 lakh rupees, but I am getting 30 lakh rupees. What does it mean? It means there is an element of additional financing also, right? For example, you are selling your car. For example, let me take an example of a student. Rahul. Okay. Rahul is selling me a car. Okay. Rahul is in urgent need of money and he is selling a car to me. So Rahul told, sir, I am in urgent need of money and I want, 2 lakh rupees. So I told Rahul, how can I help you? So Rahul told, sir, please buy my car, right? You will have an asset. Please buy my car and please give me 2 lakh rupees. I told Rahul, okay, Rahul, but the market value of this car is 1.75 lakhs only, right? Rahul told me, sir, I'm in urgent need of, 2 lakh rupees. I know that market value is 1.75 lakh rupees only. So please give me 25,000 rupees as a loan, as a loan. I will return you in the form of the rental, in the form of the installment. I will return it to you, right? In the form of the installment. So I am not giving him 2 lakh, entire 2 lakh rupees as a sale consideration. I am giving 1.75 lakh rupees equivalent to the market value as a sale consideration, and 25,000 rupees I am giving it to him as a loan, as a additional financing, right? I hope you guys are clear on this. Initial direct cost, if any, are to be ignored. The interest rate implicit in the lease is 12% per annum. The discount rate is given. Buyer lessor classify the lease of the building as an operating lease. So this buyer lessor has classified this lease of the building as an operating lease because the lease period is 20 years and might be the life of the building is 50 years or 60 years. How should the said transaction be accounted by the seller lessee and the buyer lessor? Right. So friends, first of all, let's try to solve this question, right? Because what facts are given in this question? The carrying value of the building was 15 lakh rupees in the books of the lessee, in the books of the seller. Seller sold it at 30 lakh rupees. Market value was 27 lakh rupees. The lease term is 20 year. Lease payment is 2 lakh rupees every year, right? And this transaction considered as a sale transaction under Ind AS 115. Discount rate is 12%. These are the facts which is given in the question. We need to form the accounting in the books of the seller who is a lessee also, right? So let's solve this question step by step. We all have understood the question. Let's go back to the Excel sheet. I believe my Excel sheet is visible to everyone, right? So I'll solve this question step by step. Now you have well understood this question. Don't worry. Sale and lease back. Right? Sale and lease back accounting. Sale and lease back accounting. I hope my Excel file is visible to you guys. Sale and lease back accounting, right? We are discussing illustration number 42 of ICAI study material. Illustration 42 of ICAI study material. Some facts are given. Fair value, carrying value, sale price is given. Fair value of the property is given. Carrying value is also given. Sale price is also given. Consideration is also given. Lease term is given. Lease payment is given. Discount rate is given. Lease term, lease payment, discount rate is given. Fair value is given, which is 27 lakh rupees. 1, 2, 3, 4, 5. Carrying value is given, which is 15 lakh rupees. 1, 2, 3, 4, 5. Sale price is given, which is 30 lakh rupees. 1, 2, 3, 4, 5. Lease term is given, which is 20 years. Lease payment is given, which is 2 lakh rupees. 1, 2, 3, 4, 5. Right? Discount rate is given, which is 12%. These are the facts which is given in this question, right? I hope I have covered all the facts. Do you have any facts which I have not covered? This 2 lakh rupees payable at the end of the year. Do you think that I have not covered any facts here? Now we need to calculate the impact in the books of the seller lessee and the buyer lessor. We need to calculate the impact in the books of seller lessee and the buyer lessor. We need to calculate the impact in the books of the seller lessee and the buyer lessor. Seller lessee and the buyer lessor. Friends, let's move step by step. then only you will find that this question is very simple. This question is very simple. First of all, the step number one, and you will secure your marks step-wise. Okay. Step number one, calculate the impact of additional financing. Step number one. Step one, calculate calculate the calculate the value value of additional financing, if any. What does it mean? It means the sale price is more than the fair value, there is an additional financing. Sale price minus, there is an additional financing, right? Sale price minus fair value. This is the additional financing. Sale price minus fair value is the additional financing, right? So what is the sale price here? Sale price. What is the sale price? Now you have understood the concept, right? Sale price is 30 lakh rupees. What is the fair value? Why I have given 5,000 extra to Rahul for the sake of additional loan? For 1.75, I got the car, but for additional 5,000, it is more like a loan. So this will be the additional financing. Additional financing, right? This will be the additional financing. 3 lakh rupees is the additional financing. Or let me write here. Step one is clear to all of you. This is the additional financing, means additional loan which is taken. Right. Sir, what is the accounting entry? We'll discuss. Okay. I hope this part is clear to all of you. This part is clear to all of you. So out of this bank account of 30 lakh rupees, we will credit liability loan of 3 lakh rupees. This additional financing means loan, right? Now, step number two. Step number two is I need to allocate my lease payment. Now, just think logically. एक नॉर्मल लेमैन बंदे की तरह सोचो. I got 30 lakh rupees as a seller lessee. I got 30 lakh rupees. मेरे को 30 लाख रुपए मिले. 27 lakh rupees I received as a consideration to this property. 3 lakh rupee I have received. 3 lakh rupee I have received as a loan. So total I have received 30 lakh rupees. What I am paying back to the buyer, मैं buyer को वापस क्या पे कर रहा हूं? 2 lakh rupees every year, right? For a period of 20 years, means मैं buyer को 2 लाख रुपए multiply by 20, 40 lakh rupees. I am paying back to the buyer 40 lakh rupees, 40 लाख रुपए पे कर रहा हूं, right? So now I need to allocate my lease payment of 40 lakh rupees in the ratio of present value of lease payment. I need to allocate this 2 lakh rupees every year. Every year I am paying 2 lakh rupees. Some portion I am paying for the loan, some portion I am paying for actually the right of use of the lease asset. Some portion I am paying for the lease contract, some portion I am paying for the loan, right? So I need to allocate this lease payment in the ratio of lease liability and additional financing. How can I know about the lease liability? First of all, I need to compute the present value of future lease payment, which will give me the lease liability, right? So step number two. What is my step number two? My step number two is allocate lease payment, allocate this 2 lakh rupees, the ratio of lease liability and additional financing. Allocate lease payment in the ratio of lease liability and lease liability and additional financing means loan. I'm saying this lease liability means present value, not full value, present value. When I'm saying this lease liability means present value, present value. Now I need to compute my lease liability, right? Now I need to compute my present value of this 40 lakh rupees which I'm paying for 20 years. Then there is a year, there is a lease payment, there is a discount rate. I mean to say present value factor at the rate of 12%, right? Then there is a present value. This is what which is given in this question. Year, 20 year, I am paying this lease liability for lease payment for 20 years. Lease payment is 2 lakh rupees. Present value factor is it is at the end of the year. So basically present value factor is 1 divided by 1.12, right? This divided by 1.12. This is how this present value factor will be arrived. Let me put it in 3 decimals. This present value comes out at, sorry, this multiply by this, right? The present value comes out at how much? Present value of the total lease payments is 14,93,889, right? This is the present value of the lease payment. So let rounding it off. Let's rounding off, right? So that the calculation will become easy. So rounding it off to the nearest 1,000, it becomes 14,94,000, right? Okay, 14,94,000. Simple. 14,94,000. Now, what is my total lease liability? What is my present value of the total lease liability present value? What is my total lease liability present value? Total lease liability present value. This is the present value of the entire 40 lakh rupees. Every 2 lakh rupees payment. The total is 14 lakh 94,000, right? The total lease liability is 14 lakh 94,000. So what is my additional financing? My additional loan is clear. My additional financing is 3 lakh rupees, right? So today, if I'm computing the present value, I am saying that 2 lakh rupees every year which I am paying, the 2 lakh rupees every year which I am paying, the present value comes out at 14 lakh 94,000, right? Out of, and this 14 lakh 94,000, ये 1494 क्या है? जो 2 लाख रुपए इस पूरी अरेंजमेंट में आई एम पेइंग 2 लाख रुपए एवरी ईयर, उस 2 लाख रुपए की आज की डेट में 14 लाख 94,000 की प्रेजेंट वैल्यू है. सो टुडे द लाइबिलिटी इन माय बुक्स इज 14 लाख 94,000, राइट? बट आउट ऑफ दिस 14 लाख 94,000 मेरे पास एक ऑलरेडी लाइबिलिटी मुझे पता है, दैट इज माय लोन ऑफ 3 लाख रुपीज, राइट? सो this 14 lakh 94,000 rupees, if I need to split, I have to split into the two parts. One is lease liability, which is again a present value only. One is lease liability, which is nothing, 1494 minus 3 lakh. And another one is loan, which is additional financing of 3 lakh rupees. So if I need to summarize, I will say that I will have two liability, 1194 for the right to use this asset for 20 years, 3 lakh rupees for the loan, extra money which I have taken, which is beyond the market value, extra money which I have taken. This is what it is there, 14 lakh 94,000, right? My total lease payment My total lease payment is how much? 2 lakh rupees. My total lease payment is 2 lakh rupees, right? Now, if I'm paying every year 2 lakh rupees, how much I'm paying for the additional loan which I have taken, and how much I'm paying for the space which I have taken on a lease basis. I need to allocate this lease payment in the ratio of loan and in the ratio of the lease, right? So what is my payment relating to right of use and what is my payment relating to the additional financing? I need to allocate this 2 lakh rupees into the two buckets, right? Like राहुल को मैंने 1,75,000 रुपीज कार की मार्केट वैल्यू का दिया, उसके बदले राहुल उस कार को यूज करेगा, तो राहुल मुझे लीज रेंटल वापस देगा और राहुल मुझे 25,000 रुपए का लोन भी वापस करेगा एज एन इंस्टॉलमेंट. बट ही इज नॉट टेलिंग मी, सर, हाउ मच आई विल पे in return for 25,000 rupees, how much I will pay in return for this 1,75,000 rupees. He is only given me a figure. Sir, I will pay you 10,000 rupees every year. Right. So I need to allocate कि भाई ये 10,000 में से कितना लोन से रिलेटेड है और कितना मेरा मेरा लीज से रिलेटेड, जो मेरा मेरा स्पेस राहुल यूज कर रहा है, मेरी कार राहुल यूज कर रहा है. Why I am saying मेरी? Because I have paid a consideration to him. I am become a buyer and I am become a lessor, right? So I need to compute my payment relating to the lease, I mean to say right of use, and payment relating to a additional loan, which is nothing additional financing. I need to compute all these things. I need to compute all these aspects. Okay. So how can I compute the payment relating to the lease? My total payment is 2 lakh rupees multiplied by lease liability is 1194 divided by the total liability is 1494. 2 lakh rupees my lease payment multiplied by my additional financing is 3 lakh rupees divided by my total is 1494. It means 1,59,839 I am paying towards my lease. 40,161 I am paying towards my loan. Right? This is the breakup of 2 lakh rupees. This is the breakup of 2 lakh rupees. Friends, please let me know if you have understood this so far, what I have done. This entire question, first of all, I have computed, is there an element of a loan? Yes, there is an element. How this element of loan has been computed? If the money which is paid by the buyer who becomes a lessor now, if the money paid is beyond the market value, fair value, it means that beyond is nothing, that beyond is your additional financing, that beyond is your incremental loan, right? Step number 2, if there is a loan element, it means the lessee, the seller who become the lessee now, he is paying me two component. One, he is paying me for return of this loan. Second, he is paying me for using the space which is leased, right? So one, he is paying for the right of use asset. Another, he is paying for the loan, right? So in the ratio of lease liability and loan, I have also bifurcated this 2 lakh rupees. I hope this is clear to all of you. This calculation and computation is clear. Is it clear or not clear? Please confirm me. Friends, please confirm me if it is clear to all of you. Is that clear? I am waiting for your response, friends. I am waiting for your response. Neha has confirmed, yes, sir, it is very much clear. Thank you for the nice explanation. Yeah, thank you, Neha. And let's come back to the step number 3. What is my step number 3? So far we have computed the additional loan. We have also segregated the payment into the lease and the loan. Right? Now the third step is Calculate the right of use asset in the books of the seller lessee. I need to compute the right of use asset in the books of the seller lessee. Right. Calculate the right of use asset in the books of the seller lessee. Sir, it is very simple. Whatever you have computed, the present value of the future lease payment, which is 14,94,000, that will become the right of use asset. Answer is no. First of all, that 14,94,000 present value does not belong to the lease. Out of 1494, 3 lakh belongs to the loan. So only 11,94,000 is the lease element. Right. Right. And and if you will just say that, sir, 1494 में से 1194 लीज का है लाइबिलिटी एंड 3 लाख रुपीज लोन की लाइबिलिटी, दैट इज ओके. बट इफ आई नीड टू recognize my asset, I need to recognize the asset on the basis of the rights which are transferred. So this step number three is little bit critical, right? So step number 3 is calculate the right of use asset in the books of the seller lessee. This is an important and critical step. You need to understand it very carefully. Calculate the right of use asset in the book of seller lessee. How this right of use asset will be calculated in the books of the seller lessee? First of all, you have to compute your actual lease liability, present value of the lease liability. What is your present value of the lease liability? It is 1194, not 1494. Your present value of lease liability excluding your loan component, right? Present value of lease liability excluding loan component. Multiply by what? Multiply by, being a seller lessee, prior to the sale of the asset, you have an asset in your books. You have an asset in your books, you have sold that asset. Now another asset is coming in the books, which is right of use asset. So your present value of the lease liability means the liability relating to the use of the space, liability relating to the lease, multiply by carrying value of your asset, divide by fair value of your asset, will be the right of use asset, will be the right of the use asset you are retaining, divide by fair value. Now, what is my carrying value? What is my fair value? My carrying value is given in the question. So let me take from here only. My fair value and my carrying value is given in the question. What is my present value of lease liability excluding lease component? This is 1194, right? This is what it is included here, 1194, right? Now, what is my right of use asset? What is my right of use asset? Right of use asset. मेरा राइट ऑफ यूज एसेट कितना है? मेरा टोटल आज की डेट में लाइबिलिटी जो मैं पे करने वाला हूं 1194 मल्टीप्लाई बाय मेरी कैरिंग वैल्यू कितनी थी बुक्स में 15 लाख, उसके बदले मुझे कितने पैसे मिले, मतलब फेयर वैल्यू क्या है उस एसेट की 27 लाख 663,333. This is your right of use asset. Your right of use asset is not 1194. Your right of use asset is 663,333 only. Means this is the right which you have retained. Right. So simply you can think of that this lessor is giving the asset on a lease only for 20 years. Only for 20 years. Right. And in the 20 year, if this lessor will compare, बस एक नॉर्मल सी चीज आप अपने दिमाग में सोचो कि लेसोर ने टोटल 30 लाख रुपीस पे किया लेसी को. लेसोर हैज पेड 30 लाख रुपीस टू द लेसी. 3 lakh rupees we have understood that 3 lakh rupees of loan element is there. So 3 lakh rupee lessor has given a financing to the lessee. Out of 27 lakh, which the lessor has paid to the lessee, how much lessor is getting back? Only 1194. आज की डेट में जो 27 लाख रुपए, आज की डेट में 27 लाख रुपीज जो लेसोर ने लेसी को पे किया है, उसके बदले आज की डेट में प्रेजेंट वैल्यू क्या मिलने वाली है उसको? 1194 ओनली, सिर्फ 1194 मिलने वाली है. व्हाट डज इट मीन? इट मीन्स actually the seller has transferred some rights to the lessor, right, which the seller lessee is not enjoying. For example, the seller lessee is not having any right to exercise the purchase option, right? After 20 years, this asset will belong to the lessee, it's lessor only. After this 20 years, this asset will belong to the buyer only. It means the buyer is enjoying some rights and some rights are retained by the seller as a lessee. So this seller lessee has to recognize the right of use asset in only in proportion to the carrying value of the asset divided by the fair value of the asset, right? So this right of use asset is coming out at 663. Now, what is my step number 4? What is my step number 4? My step number 4 is compute gain or loss on the sale of rights transferred on the asset. Compute gain or loss on the sale of right transferred on the asset. Compute gain or loss on the sale of rights transferred on the asset. Right. In this case, let's compute the gain or loss on the sale of rights transferred on the asset. That will be the balancing figure. Now, I will complete the accounting entry for this entire transaction in the books of the seller lessee. You need to help me. What should I debit? What should I credit? You need to help me. First of all, can I do bank account debit? First of all, can I say bank account debit? By how much? By how much? Bank account will be debited by how much? 30 lakh rupees. Bank account will be debited by 30 lakh. Right? This is amount received by the seller lessee. I credit to additional loan. Can I credit this? What is the value of the additional loan? 3 lakh rupees. Right? Can I credit to lease liability? ROU and lease accounting. Can I credit lease liability by how much? 1194. Any problem with this accounting entry? This is my additional loan. This is my loan, which is amount received beyond market value. Right? This is lease liability relating to the use of asset. Right? Any problem so far? I debit right of use asset. Right of use asset account debit. Six six three double 66333. Right. This is my right of use asset. Using the asset for 20 years. Right. And since I have sold this asset, I have to credit the building also. Building. I have to credit the building also because I have sold the asset. Account credit by how much? 15 lakh rupees, which is the carrying value of the asset, which is given in the question. 15 lakh rupees, right? So asset be recognized at carrying value. Asset recognized at carrying value, right? Friends, do let me know if you have any problem in whatever accounting entries I have passed. If you have any problem, I would be happy to, re-explain, explain it again. I would be happy to explain it again. Right. Friends, do let me know if you have any question, any problem in this particular accounting entries which I have passed. Simple, whatever the money which is received by the seller lessee, I have debited the asset. Right of use asset, I have debited. Loan, I have credited. Lease liability, I have credited. Building, I have credited. Right. This is what I have done. Okay. So the total of the debit side is 36 lakh 63,000. The total of the credit side is 29 lakh 94,000. Right. The debit side is 36 lakh. Credit size is 29 lakh. It means there is a difference of how much? There is a difference of how much? 3633 minus 2994. 669 triple three. This will be your balancing figure, right? This will be your balancing figure. This is my what? This is my gain on the rights transferred. Credit. This will be your balancing figure. This will be your balancing figure, right? This is how your gain or loss on the sale of rights transferred on the. I hope this is clear to you guys. This is clear to all of you. I believe it is clear to all of you. Do let me know if you have any challenge here. Please do let me know if you have any challenge. Now, what will be the accounting? Now, let's talk about the accounting in the books of buyer lessor. We have discussed the accounting in the books of the seller lessee. Accounting in the books of buyer lessor. What sort of accounting entry will be passed by the buyer lessor? What sort of accounting entry will be passed by the buyer lessor? What buyer lessor will do? Initial recognition. Initial recognition. Buyer lessor will do building account debit, right? Building account debit. By how much? Building account debit by how much? 27 lakh rupees by market value only. Building account will be debited by 27 lakh rupees, the market value. Financial asset, debit, loan. This loan which he has given it to the lessee, debit. By how much? By 3 lakh rupees. By 3 lakh rupees. Okay. Two, he has paid the money, bank account, credit, 30 lakh rupees. Right? 30 lakh rupees, right? Hope it is clear. Hope it is clear. Right? What is the subsequent recognition? Now, this building of 27 lakh rupees, what he will do? Will depreciate, right? And this financial asset, what he will do? This financial asset, he'll do. So basically, this is an operating lease. So he is getting 2 lakh rupees every month. Out of 2 lakh rupees, what he is getting every month, whatever he is getting every month out of 2 lakh rupees, 40,000 rupees. You remember this number? You remember this number? We have segregated 40,000 rupees he is getting for the loan and 159,899 he is getting for the lease rental, right? He is getting lease rental, subsequent recognition, subsequent accounting, I would say. Lessor will depreciate the building, building. Every lessor will replace the building over the useful life, right? That is number one. Number one. Number two, lessor will recognize lease rental, lease rental on accrual basis, right? Since it is an operating lease accounting, it is given for the lease for 20 years. Life of the building may be 40, 50 years. Operating lease, right? What is the accounting entry? Accounting entry will be, what is the accounting entry? Accounting entry will be bank account debit to bank account debit to lease rental, to lease rental income, income credit. By how much? By how much? We have already split this. So he will receive 15989 for the lease rental, right? And the remaining he will receive for the loan asset. Third, I hope I am audible. Third, lessor will recognize the receipt of loan installment and and interest interest income on loan, interest income on loan, right? Now, what is the amount he will receive? Amount he will receive 2 lakh minus 15989 every year, means 40,000 he'll receive every year, right? Now, what is the accounting of this 40,000? How this accounting will happen? So let's create a loan asset schedule. So it is here, it is your opening balance, like you are creating a lease liability schedule, opening balance, interest income, right? Then your payment of asset, interest income, then your payment, repayment, and closing balance. Payment and then closing balance, right? Your total year, every year you will receive this 40,161 for 20 years, right? Now, what is your opening balance? Your opening balance is how much of the loan is there? Your opening balance is 3 lakh rupees, right? What is the interest income? 12%. Do you remember? Your interest income will be 12%. What is the payment which is required to be made? Every year minus 4161. This is the closing balance. Plus. Next year, this will become the opening balance. Interest has to be charged at the rate of 12%. It is given in the question. Payment is the same. This is the same payment. Closing balance is this one. If you will just carry it for the next 20 years, you will find it zero. You will find it that the balance has become zero. 260, negligible number. So basically, just adjust this with the interest income of the last year. Okay. What is the accounting entry you will pass? You will pass the accounting entry in the first year. Let's say bank account debit, right? To interest income, to financial asset, loan, financial asset, which is your loan. This is the accounting entry which you need to pass every year. By how much amount? Let me tell you. This is the schedule which you have already created. Bank account will be debited by how much? 40,161. Interest income you will receive the first year 36,000. The remaining goes to your financial asset, right? This is the first year entry. This is the entry at the end of first year. This is how this entry has to be made for the next 20. Friends, I have already given all the calculation accounting entries in detail on the sale and leaseback arrangement. Do let me know if you have any question relating to the sale and leaseback accounting in the books of the seller lessee or in the books of the buyer lessor. If you don't have any question, I would be happy to conclude the session, right? Please do let me know if you have any question relating to the exemption with respect to the low value leases, right? Then sub lease accounting and sale and leaseback accounting. Please do let me know if you have any question relating to these three aspects which I have covered today, or any other aspect which I have covered in the last 4 classes. Please do let me know, friend. So the solution I have given you in detail in on the Excel file, and it is also given in your PPT, right? So friends, please let me know if you have any question. If you don't have any question, I would be happy to conclude the session. I'll wait for the another 30 seconds. Neha is asking, sir, quickly, please summarize the 4 steps quickly. Sure, Neha. For sale and leaseback, if it is concluded that yes, this transaction is a sale transaction under Ind AS 115, revenue from contract with the customer. Number one, you need to, first of all, under step one, you need to see whether any loan element is there in this transaction. How will you arrive at a loan element? If the seller is getting a money which is beyond the market value, that will be considered as a loan element. That is step number one. Step number two, since you have concluded that there is a loan element, whatever lease payment you are making, it is not only a lease payment, it is a payment towards lease liability and towards your loan element, right? Towards your loan element. So you need to split this yearly, annual payments or monthly payment, whatever, into the component of using the space and component of using the loan, right? So loan you are aware of. Now, how do you aware of component of using the space? Whatever lease rental you are paying, you have to prepare a present value discounted schedule. It will give you what is the total liability, total present value of the total liability. Like in our question, the present value of the total liability was 14,94,000. When you reduce 3 lakh rupees of loan, it will give you 11,94,000 of lease liability. Now, whatever 2 lakh rupees every year you are paying, you have segregated this 2 lakh, multiply by 1194, divide by 1494, which is your lease component. Then 2 lakh multiply by 3 lakh, divide by 1494. This is your loan component. So now you have arrived at this number. Okay. Step number 3, since you had an asset already, you have de-recognized the asset, that is building. So first of all, whatever lease liability you are paying, which is relating to the space, which is 1194, this lease liability multiply by carrying value, divide by fair value, will give you the right of use asset, right? Will give you the right relating to that asset. Okay. So friends, after that, when you arrive at a right of use asset, after that, you have to compute the gain or loss in this transaction. So what you will do, whatever money you have received, you will debit your bank. Whatever ROU you have calculated, you will debit ROU. The building, the asset which you have sold out, you have to de-recognize. The lease liability, 1194, you have to create. The loan, you have to create an accounting entry. And when you settle all these numbers, the balancing figure will be your gain or loss, which is arising on this transaction, right? In case, so these are the 4 steps in the books of the lessee. In books of the lessor, very simple. Lessor will debit the asset and credit the bank, right? And if lessor has given a loan also, the lessor will debit the loan asset as, right? So this is what is sale and leaseback accounting. Friends, I would request each one of you that please solve all the questions from ICAI study material. all the questions, right? I have covered so many questions from the study material. I have covered so many calculation examples at my own in the Excel file. I will upload this presentation. I'll upload means I'll share this presentation in Excel file with the Board of Studies, and they will upload on the portal and you will have access of that, right? So thank you so much. I hope you guys have understood this Ind AS 116 very well in the last 5 lectures. Thank you so much, friend, for the patient hearing and listening. Thank you so much, and I hope you find this lectures useful. Bye bye. Take care.